I do think, when I was on a few months back, we talked a lot about uncertainty, in particular around Brexit, in particular around the trade deal. Those are pretty much behind us. And at least the phase one deal, there hasn't been a lot of criticism around the phase one deal. Even, the Democratic side in the U.S. has not criticized the phase one deal much. Now maybe they're criticizing other things, but that is a good start. So I am confused myself. If you look at the numbers in terms of what the IMF has put out, there's obviously they downed it by 0.1. I think a lot of that, to be honest, has to do with India, the downgrade in India, because they did downgrade India. India is going through some structural problems, liquidity problems. So I think that was maybe more the factor there. But I do agree the words around it could be more positive with the same numbers.
Well, let me ask you about that, optimism versus pessimism, because I remember we sat here a year ago and people were in their cups. The CEOs didn't think it was going to be a good year. We'd come off a bad fourth quarter for markets. Then we had a Fed pivot. Things got a whole lot better. It's been a phenomenal year for investors if they were in the game through the year. Here we are today. We've potentially got a Boris bump. We've potentially got a Trump bump. We're talking about uncertainty fatigue. When are we going to know just what this year looks like, do you think? When should we start shifting our conclusions?
I'm actually pretty positive about the year. I do think as we go into the first couple of months here, you are going to see more of a bump because of the uncertainties that are not there anymore. So in Europe, the UK, I'm very bullish on the UK longer term. I actually think if the UK does what they need to do in terms of some of these deals with Europe, with the US and so forth, I think the UK is a great place to be, and I think longer term it's a pro-business environment. If they do the right things in terms of taxes and so forth, I think the UK will be very attractive going forward.
And yet, I'm going to be really repetitive and go back to previous conversations with Mark Weinberger as well, if I may. He previously of EY. Why isn't that money translating into anything other than more buybacks, billions and billions of dollars of buybacks rather than capital spending? Mark was of the mind that capital spending would take off aggressively in 2019. Yeah. I still have my concerns that companies are still thinking very short term rather than investment in the future.
I think capital spending right now, you have to look at what's actually in that number, because there are a lot of people hiring. Hiring is capital spending. But that might not really go into the number that you guys all report. But if you look in the U.S. in terms of jobs, the job market, could not be better. Wages are increasing.
Could be better. You said wages could be better.
But wages are getting better. Wages are getting better, and I think they're going to continue to get better. So if you look at, many places are imposing, minimum wages that are higher than normal. I mean, that part is improving, and companies are investing in people.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.